Good morning, guys. My name is Sean Dexter, and I welcome you back to the Mango Grow for a daily Bitcoin and market analysis. Alrighty, it's a Monday. Happy Monday to all of you. I hope you guys had a great weekend. The markets certainly did. The crypto market certainly did. I hope you guys caught some of those gains, juicy gains. Our Woo trade is doing fantastic, right? But hey, in today's video, we're going to be focusing on Bitcoin, but we're also going to be spending some time realigning ourselves with what's going on in the macro scene, because we do have the upcoming FOMC meeting in the first week of Feb, and we have something really interesting going on over here, okay? Something that should sober us, right? Something that should realign us, something that should calm down excitement and get our expectations straight. So we're going to be spending some time talking about this today. I also want to talk about something really quickly. I've been getting far too many questions recently as to, hey Sean, are we in a bull run? Should I FOMO all of my money into Bitcoin over here? And in my opinion, guys, the time to have been getting excited was on this weekly close, right? I've been putting together a story for weeks now, okay? We've been talking about the cascading pattern. Essentially, we had this falling channel that we've been talking about with the ascending triangle right over here. And we broke this ascending triangle, right? If you zoomed in and you looked at this weekly candle, we closed deceivingly well above the weekly. You just had to zoom in. The market retested that level and then just took off, right? So that was the time to have been getting excited. This range over here, and we had a initial target of around $24,000, right? Well, guys, we're almost pretty much there. In my opinion, we've pretty much hit our target, right? We have hit our target, really. There's a few percent more to go, and I really don't think that you guys should be taking any leverage trades over here, right? The market could go, but if it does, you should be looking for opportunity elsewhere in either altcoins or perhaps in other markets. But we'll come back to this, and I'll be discussing why exactly I don't think that we should be getting too aggressive with Bitcoin over here. Now, for those of you who are just joining the channel, I really do recommend you guys go back and watch some of the videos that we've been putting together, because there are multiple components, multiple indicators. There's a story that we've been putting together that is unfolding, leading into this bull cycle. I do understand that it's going to require some time and investment on your part to watch some of those videos, but hey guys, nothing worth having is going to come simply, right? No big wins in your life is ever going to come without some effort at the very least. Now, that being said, I do understand that it can be difficult to keep in mind everything that we are talking about, because there are several even smaller components of indicators that we've been talking about over the past 6 to 8 weeks, right? So Krisha and I, what we've been doing is we've been working on a bull cycle checklist that we've been putting together for the seedlings, and it's still a work in progress, but you seedlings should be able to find it underneath the private channels that you guys have access to under seed resources, right over here, right? Come under seed, and under the main seed channels over here, you will see seed resources. We did send out a notification, but in case you guys did miss the notification, you'll be able to find it under seed resources right over here. It's essentially a checklist of all the things that we're looking at. And again, it is a work in progress. I will be adding more, and this will be a dynamic checklist as our views change, etc. We'll be updating you guys each time I do make a change. I will be updating you guys, right? So for example, I'm looking to add target levels and target zones for you guys, right? Target levels for Bitcoin to overcome, for us to be able to increase our bullishness, increase our confidence on whether or not we are leading into a parabolic run. And by the way, guys, I do differentiate between the beginning of a bull cycle and the beginning of a bull run. There's a big difference between the two. And again, that's something we have been talking about over the past few weeks, right? We've been talking about the 4 stages of the Bitcoin cycle that we derive from the Bitcoin mining cycle. All right, so now let's go ahead and talk about what's going on with Bitcoin. Okay, I've zoomed in over here for you guys, and I want you guys to focus in on this price action over here, okay? Primarily, I want you guys to focus on this wick high, okay, which I believe is coming in at around $22,824. What's really important about this wick high, guys, is that we took out this high coming in all the way from September 2022. That's a really good sign. However, Bitcoin failed to close above the high. And what I mean is this candle close over here, guys, this weekly candle close closed underneath the high. Now, this is one of the more frustrating ways that Bitcoin tends to close its candles in a bull run. It closes ever so slightly underneath a level that you want it to close to get that increased confidence for the continuation. That being said, regardless of whether we close underneath or over that level, I would not be getting too aggressive over here, considering that we have the weekly 200 moving average right overhead, right? And this is coming at around 25,000. At the moment, we're pretty much sitting at $23,000. So that's only a $2,000 spread over here, right? And if you take into consideration how far Bitcoin has come from, if you take into consideration that we're looking at the weekly time frame, $2,000 is not all that much to yearn for, right? It's not worth putting on positions on the weekly time frame. Now, if you're taking trades on the lower time frames, like the 4-hour, the 1-hour time frame, by all means, you could do it. You could trade the spread over here for $2,000. But if you're looking at the weekly, guys, Bitcoin has pretty much bounced from around $16,000 all the way up to $23,000. That's a $7,000 move already, right? I wouldn't be too keen, especially when you take into consideration what we are seeing over here on the dashboard, right? Let me go ahead and zoom in a tad bit more for you guys right over here. What I have for you guys over here is the 12-hour time frame. Let me go ahead and write it down. 12-hour and the daily time frame, right? So the first column over here is a screenshot of the 12-hour time frame, and the second column is the daily time frame. Now, you guys are probably noticing that the trend is long on both of them. So you might be saying, hey, Sean, why shouldn't I long this? The trend is long, right? Shouldn't I long this because the trend is long? No, the trend switched long 18 days ago. Guys, this move is already up 34% on the 12-hour and 32% on the daily. Look at the volatility. The volatility is red on both of them. When this flipped long, and we were covering every single day that this was switching, right? Do you guys not remember what the volatility was? It was blue. It was single digits and blue. Now it's sitting close to 100 and it's red. This is not the time to be getting aggressive. If you want to put on positions on the low time frames, do so knowing what's going on in the backdrop. And the backdrop at the moment is that we have weekly resistance coming up very, very soon, and daily volatility and 12-hour volatility is very, very high, along with bearish divergence on both of them. Okay, bearish divergence on the 12-hour, bearish divergence on the daily, right? And by the way, guys, the 12-hour bearish divergence is actually flipped from a initial bullish divergence. So we had initial bullish divergence that has played out. Okay, it has already played out in my opinion. We've seen the move play out, and now it has flipped into bearish divergence. I see a lot of new traders make this mistake. They look for the divergence only on their bias. So if they are bearish, they look for bearish divergence. If they're bullish, they look for bullish divergence, right? Don't do that. Look for the potential of divergence to be flipping as well, right? A lot of times you're going to see, like in this situation, you had bullish divergence on the 12-hour time frame that played out, and now it is flipping into a potential bearish divergence that may play out, right? Remember, this is not triggered yet. We do not have a trigger of this bearish divergence just yet, but if it does, it may have a cascading effect that could cause a higher low on the weekly, and that could be a good bit of opportunity. Now, we don't know. Okay, I'm not here to tell you that we are definitely going to be seeing a pullback over here. In fact, I do think that Bitcoin makes another leg up to take out the previous weekly's high, perhaps even test the weekly 200 moving average, and then we'd be hunting for that weekly high or low. That being said, guys, from my experience on Bitcoin, I know this may not be what many of you guys want to hear, but my experience on Bitcoin is that on the weekly time frame, Bitcoin tends to be its most emotionally devastating, in that when you want the weekly higher low to come, it just won't come. And when you finally give in, that's when it comes. I know that's not helpful, but this is my experience with Bitcoin, which is why when you get the easy trades over here, right, this was the time to be scaling in. But again, it doesn't matter. There's so much opportunity in the markets, and we're always here. We'll wait for all the signs to be put in place again for the next big opportunity, right? Now, if you're already in position, enjoy your trade. Look to take profits at levels that you had pre-decided and pre-planned. But if you had not planned a trade, do not FOMO in over here, okay? Stick to your plans at all times. There's more going on over here. Remember, we have weekly resistance, and in around 2 weeks, we have the FOMC meeting. And what's going on over here, guys, is very, very interesting. Okay, so we've been looking at the Fed Watch tool for a few months now. And you guys are probably noticing something a little bit peculiar over here. a little bit different over here. For those of you who are just joining us, let me go ahead and quickly explain what this is over here, what this Fed Watch tool is. Essentially, put very simply, very briefly, it is the market's estimation of what the Fed is likely to hike in the next meeting. It's essentially a visualization of the probabilities the market's placing on whether J. Powell increases the interest rates by 0.75%, 0.5%, 0.25%, and so on. Now, for the longest time, the market was pretty much debating between 0.75 and 0.5%, right? The market was expecting J. Powell to be extremely hawkish, extremely aggressive with the raise in interest rates. You could even look forward and look at what the market was pricing in for like months leading to Jan, Feb, etc., etc. And if you guys remember from our previous videos, you'd know that the market was placing a very, very low to negligible probability that we actually get a 0.25% rate hike. Essentially, the market was saying that, hey, the Fed is not going to be this dovish, right? They're not going to be this mundane with their rate hikes. They're going to be very aggressive and they're going to increase either by 0.75 or 0.5%. Getting a 0.25% rate hike is very, very unlikely, right? J. Powell's not going to be that dovish, right? J. Powell's going to be aggressive. He's going to be hawkish. Now, however, if you look at what the market is currently pricing in, you can see that the market is pricing in a 99% probability that we get only a 0.25% rate hike. In fact, there is now a probability, albeit very, very small, but there is a probability that we get a 0% rate hike. So now the market is completely dismissing these two probabilities over here of a 0.5% and a 0.75% hike. And now the market is being like, you know what? J. Powell is going to be extremely, extremely dovish relative to how he has been acting for the past few months. This time he may actually not increase at all. It is a small percent, but the market has priced in the fact that J. Powell is going to only increase rates by 0.25 or perhaps even not at all. And this, guys, could explain the increased risk appetite that you are seeing across the markets, right? In equities as well. You're seeing equities rally, you're seeing Bitcoin rally, etc., etc. But I'm here to ask the question that, hey, what if the market gets a surprise? And at this point, it's very, very difficult for the market to be surprised towards the bullish side, right? For the market to be surprised towards the bullish side, J. Powell would actually have to come out and say, you know what, we are not getting any rate hikes at all. But what if he actually comes out and says the exact opposite? What if he comes out and says, hey, I'm going to be increasing interest rates by 0.5%, right? The market is not going to react well to that at all. And he may actually do this just to prove a point. Because I've said this to you guys before. Leading to November and December, I said that, you know what, we don't want the market to get too excited on what the Fed is likely going to do in regards to either going down with its aggression or even going flat with its aggression. Because if the market starts pricing all of that in, that's going to be dangerous. Because the Fed does not want the markets to get too bullish. Because if bonds go up, interest rates are going to come down, right? If equities go up, financial conditions loosen, right? Remember, if interest rates go down, guys, it means that mortgage rates are going to go down. If mortgage rates go down, it means that people are going to start wanting to buy houses even more, which is going to increase inflation. If asset prices like equities go up, people are going to start feeling richer, which means they're going to go out and start buying more things, which is again going to increase inflation. These are things that the Fed just does not want at this point, not when inflation has not fully come down to their target range. And their target range is 2%, right? As things stand, right, the Fed's target range for inflation is 2%. This may change in the future, right? This may, for example, change to 4%. But for now, they're going to try to bring inflation down to 2%. And at the moment, inflation is nowhere close to 2%. If the market starts behaving like everything's hunky-dory and starts pumping up asset prices, allowing for inflation to get out of control again down the road, Fed is going to want to nip that in the bud. And if they come out and just for the F of it say, you know what, we're going to be increasing interest rates by 0.5% because we think you guys have been misbehaving, this is going to like really, really, really shock the markets, because all of this 99.8% probability is going to have to get it priced out. And that's going to be painful, because at the moment, the market is pricing in the fact that the Fed is going to increase rates by only 0.25%, right? 99.8%. Now, do I think the Fed is actually going to come out and do this? No, I really don't think so. But it is a risk that we need to be keeping an eye out for, considering that we are sitting up against weekly resistance over here on Bitcoin, right? TA comes first. Now you combine that with a backdrop of what's going on with the Fed in a couple of weeks. Well, I would want to err towards the side of caution over here. All right, before we wrap up, let's go ahead and take a quick look at the market's future expectations of rates, right? By looking at the 30-day Fed funds futures, we can get a derived implied rate of what the market thinks the Fed is going to have interest rates by certain dates, right? So we can see essentially over here, I'll simplify it for you guys. We're not going to go into detail, but essentially what this is saying is that the market is expecting the Fed to raise interest rates all the way up to summer this year, right? So around June to July is where we are seeing interest rates peak, okay? But we are seeing rates peak at 4.9%. At the moment, we are sitting at 4.5%, right? So let's say we round this up to around 5%, okay? This means that the market is expecting only 2 more rate hikes between today and summer of July 2023, right? So between today and July, the market is expecting only 2 more rate hikes, or either 2 rate hikes of 2.5%, guys, right? Because 0.25 plus 0.25 is going to equal 5%, right? On top of the current 4.5%, or the market is expecting only 1 rate increase of 0.5%. That's the market's expectations at the moment. Now, we don't know whether the market is going to be right or not, but it's really, really important that we understand what the market expectations are. Because if the market is wrong about this and the interest rates are actually sitting higher than 5% come summer, let's say we're sitting all the way at 6%, right? Then the market is going to feel some pain. At that point, the market is going to unprice the fact that, hey, the Fed was going to increase rates by only 0.5% between today and summer of 2023. We can see that going all the way towards the end of year, right? December 2023 or early Jan 2024, the market is actually expecting interest rates to be lower than even today. Today we're sitting at 4.5%. By end of year, the market is expecting interest rates to be sitting at only 4.4%. So between summer and Jan, right, or December, the market is expecting interest rates to actually go down. The market is expecting J. Powell to cut rates between summer and December, guys. This is really interesting, okay? This is all being priced in. Okay, so the bullishness that you're seeing in the markets at the moment includes all of this. It includes that the market thinks that the Fed is going to be decreasing interest rates. Now, whether that be because the market thinks that the Fed has got inflation under control and things are hunky-dory, or whether the market thinks that we are going into recession is left to be determined. Some people think the former, but we're not going to get into that for the purposes of this video. This is a quick look at essentially the futures curve of market expectations, and we can see that into the future leading all the way to 2025. Okay, this is all the way up to 2025. Over here, we're sitting at today. The market is expecting interest rates to go down. Okay, this is the future expectations of the market. Okay, and with a wide range of different probabilities, of course, right? You guys can see that as we go further out in time, the market is allowing for a wider range of probabilities because, hey, things are uncertain, right? But regardless of that uncertainty, the market is still pricing in a upper bound of 3.9% leading into 2025 and a lower bound of 1.25%, right? Both of these, this entire range, guys, is much lower than where we are currently sitting at, right? The average that the market is expecting is around 2.5%, so much lower than where we are sitting at, which is currently 4.25% to 4.5%, right? So this is the range, the Fed funds target range at the moment. Market is expecting us to go all the way down to 1.25% at the extreme. But what if we see the complete opposite? What if we actually start trending towards the upside, right? That difference, guys, between market expectations and reality is actually opportunity for the rest of us. All right, so we're going to go ahead and stop there because I'm pretty sure I overwhelmed you guys with a lot of numbers today. But if you guys did enjoy this and you guys want me to go into further detail on this every week, I do want to bring these topics up with you guys because as a community, we need to learn, we need to challenge ourselves. And as overwhelming as this is for all of us, right, including me, as overwhelming as all of this is, we need to challenge ourselves and always keep learning. So if you guys are enjoying this, let me know in the comments down below. If you guys aren't enjoying this, let me know. Depending on your reaction to these kind of videos, I'm going to be doing them more often or not. So until the next video, guys, do the mango way, do the easy way, do the stressy way. Remember, we are sitting at weekly resistance. Bitcoin is looking really good. I'm not saying that we're going to come down for sure. Weekly 200 moving average overhead at around $24,000 to $25,000. We have the FOMC meeting coming up in around 10 to 12 days. Just be vigilant, be careful. Vol is pretty high. I'll see you guys in the next one. Ciao.